I'm Beth Ewen with Franchise Times, and I'm talking today with Brian Frank of TD Bank. We're going to talk a little bit about the state of the capital markets for restaurant finance, something that, Brian, you deal with every single day. So just in general, it's a big question, but give us a summary. How does it look for restaurant finance right now?
Thanks, Beth. I think right now it continues to be a borrower's market. There are probably more folks actively lending directly to both restaurants and franchise restaurant groups, I think, as long as I can remember, and I think most people can remember. And so as rates continue to be low, there's competition among the banks. There continues to be a very strong environment. I think operators are able to get pricing they want and the structure they want, depending on the institution they want to work with and what they're really looking for in their structure.
Break that down a little bit for me, because in the past, the big multi-unit operators, for example, with the legacy brands, have had no problem getting financing, and I imagine that's still the case. But what about others? Maybe those who are in emerging brands, maybe those who aren't quite as big as some?
I think in the established brands, especially the large operators, right, they've always been able to get the financing. People have been comfortable. I think the difference there is you generally have a bank group, right? And so it depends on what the most conservative group of the bank group is for those structures. I would say the medium-sized operators are probably benefiting the most at this point in time, because there you have one institution will hold the whole loan, and therefore they can do the term. If they're comfortable with those terms, they can be as aggressive as they want without worrying about having to bring in any other partners. And I think because there's so much competition at the moment, the smaller operators in the established brands are able to get the financing they need to grow. And I think once again, because of the depth of the market at the moment, and in people having money to put to work, that they're looking at the new up-and-coming brands. I think that's still more of a challenge for banks to get to understand those brands and the track record and the longevity of those brands. But there's much more activity there, and people are searching to where they can put their money to work.
Are you feeling that there's any sort of a bubble? Do you feel like it's overheated at this point, or?
It certainly seems, in my opinion, that the markets are very strong right now, and the structures continue to be getting more favorable to the borrowers from both price and structure. And so it seems to me it's most certainly a very aggressive market right now.
And how long have you been in this line of work?
A little more, I've 11 or 12 years.
So compare and contrast a bit. You went through the run-up to the collapse, and then now we're coming back up. How does it feel to you out there?
I think it feels, similar to where we were in 07 and 08, or I guess it's 07 really, in terms of that the structures are much more aggressive. I think the difference now is you still were able to get some price, I think, back in 07. You're right now, I think for a while people were keeping discipline on structure, really holding the line on structure, and were able to use price to justify the structure. And now that there's no price to be given, you're working through structures and trying to get comfortable with the way the deals are working to get the deals done.
Now, what sort of effect do you feel that interest rates are going to have? People's talking about, is it going to be hiked? Is it not?
Well, they've been saying now for every year now for the last 5 that rates are going to rise, and obviously it doesn't seem they could go much lower. It does seem they've indicated that they expect it to rise in the near term. We will, we'll see. I don't, it seems that they will rise. How steadily and aggressively they rise remains to be seen. I don't. They've been so cautious to date. You wouldn't foresee that all of a sudden there would be a huge run-up in rates, but you don't know. Obviously, going into election year, you don't know how they'll want to play that to manipulate anything.
Another waiting game on interest
Yes.
rates for sure. I've been talking with Brian Frank with TD Bank, and I'm Beth Ewen with Franchise Times.